Probably wondering, do you pay Social Security tax on your retirement income? Well, let's just dive in and talk about what the breakdown is. When do you pay tax and when do you don't? And actually, even better, can we even avoid taxes altogether? Tune in right now. You're probably wondering, like, how much tax do I actually pay on Social Security income, right? Especially if you get into retirement, the last thing you want is to be able to have less money in your pocket because you have to keep paying taxes on the money you've been earning, even if it's on Social Security. Here's a good answer. The good short answer is you do not pay income tax on your Social Security. However, you do pay taxes on other things. And I want to talk to you about today about what can you do to avoid taxes on the rest of your money that you will be paying taxes on. Okay, so Social Security, we know, as I said, Social Security income is not taxed. You do not have income tax on Social Security. If you think about it, it already was a tax. To get taxed on the tax would be pretty lame, wouldn't it? I wouldn't put it past the government to ever do that at some point, but at least we know for the most part they try to do away with that. However, the Social Security income you do earn does add to the income that you're also earning, whether it be from your job, which you do pay income tax on, as well as any kind of retirement income you might be pulling off of those qualified plans like IRAs and 401ks. Yes, I know, you thought that 401k would just delay tax forever, but at some point, you gotta pay the piper, you gotta be able to pay income tax on that money, and that just adds the income on top of the income you're already earning, and that does potentially put you in a higher tax bracket. So no, you do not pay income tax on Social Security tax. Good news. Good news is you don't pay any more Social Security tax on Social Security income. I appreciate that as well. But you do and potentially can pay a lot more tax in other areas. Just so you're aware too, there are situations where your Social Security income can be taxed, not by Social Security, because that would be dumb to have to pay it twice. It's almost like an echo of an echo. But instead you do actually could pay income tax on that money. Now, if you're under a certain threshold, for example, if you're earning less than, but with your Social Security income, if it's less than about $34,000 a year, give or take. If you're married with a couple, it could be about $40,000 a year. If you're earning less than that in Social Security income, you probably won't get income taxed either. And by the way, if you have active income, money that you're getting from a job or from a business, you will be paying Social Security tax on that money. So just be aware that although you may not be paying Social Security tax on your Social Security income, the other money that you're earning actively does get taxed with Social Security tax. And that's even true for me as a business owner. Even though I can adjust it to pay less, you do still end up paying Social Security tax. All right, so that leads to the next question, right? Okay, now, yeah, we know we're not paying Social Security tax on our Social Security income, but how do we minimize our taxes in other areas? Because if you've been following typical financial advice out there, you've been putting off your taxes to a later date. Now you get to the point of retirement. And just so you know, the average retirement income right now is $50,000 a year. That's including about $29,000 of that being Social Security. So that means you only have about $21,000 from other sources plus $29,000 Social Security to make about $50,000 a year that the average couple is living on today. One, that's not fantastic. Two, that means you're still having to pay tax. You still have taxes on your money. Yeah, so you might be able to get some of that back, but remember, if you were told to pay off your house, you're no longer writing off mortgage interest. You hopefully, I mean, it's possible still, but you may not have any more kids at home, so there's no more write-off having your minor children anymore. Even if you have them in the home, you may or may not be able to write them off anyways, even if they're eating your food and everything else in your basement, right? It's still, we have to get taxed on the money, the little money we have left. So the question is, can we minimize those taxes now, today, before you get to that point? Can we also minimize taxes in different ways? Maybe some out-of-the-box ways that could be lower risk than just trying to gamble your money in the stock market. We already know about 401ks and IRAs. Remember, they delay tax. Now, one option to be able to be more tax-free is a Roth IRA. Now, you do use after-tax dollars to go in a Roth IRA, but it does grow tax-free. It comes out tax-free. So that could be tax-free retirement income you could be getting that, again, doesn't count against you. You don't pay Social Security tax on that, yay, and we don't pay income tax on that either. By the way, Roth IRA can be great, especially because there's an option called a self-directed IRA or self-directed Roth IRA if it's a Roth. Self-directed means that you have the ability to invest it wherever you want. So often we get clients that do have old 401ks and IRAs and they say, well, what do we do with these things? We already know we don't trust the stock market, especially because it's been going up for so long. It's probably going to come crashing down anytime in the near future. So where else can we put that money? And I say, well, you can do about anything with it. If you self-direct it, you don't have to go where your financial advisor tells you to go, which is always mutual funds. Treasuries, bonds, stocks, those kind of things. That's all they tell you to do. But did you know you can actually invest in things like real estate where you have real assets backing up? Did you know you can actually invest your money in a lot of alternatives, even like oil and gas? If you're worried that gas prices are going to go through the roof, you might as well make money off of it, right? So there's a lot of ways to do that. It could even go towards certain types of businesses, not ones that you own, but if somebody else owns it, you could actually invest in other people's businesses, like franchises, car washes, things like that. You can invest in self-storage, apartment buildings. You can invest in actual industrial buildings, which actually have not been hurt in the real estate market, unlike other types of real estate. You can actually invest it in all kinds of things. Now, I would say I wouldn't buy a rental with it, especially if you're getting a mortgage on it, because then you can get double taxation. But if you have a Roth IRA, you can grow it in so many ways, make bigger income that you could potentially make in the stock market, and it's all tax-free. Huge, huge benefit for you. It might actually be the difference between you living on a very meager, retirement, where you're trying to stretch every dollar like my dad had to do, or one that's more comfortable, a better lifestyle that you can have with it. That's the difference. Now, that's not the only thing. There's even things like we talk about infinite banking on this channel. Now, I always talk about infinite banking, using whole life insurance to be able to have this tax-free, high-yielding savings account, right? Which is great. It's a great way to store money, make way better than you will in the bank anyways. Especially if you're gonna have bank money just sitting around doing nothing, or CD money. Even if you're thinking about annuities, sometimes whole life insurance can be even better than those options. However, it does depend on, one, how it's set up. The agent has a lot of control. It does matter on the company too, but it's how the agent sets it up that can either rip you off or make it a great vehicle for you. Now, I use it for myself because I like to have this tax-free savings account that I don't have to report taxes on, which is great. But the great thing is as well is that I can also pull off income from it tax-free. It's just like a Roth, but I don't have all the limitations that a Roth gives me, where a Roth says you can only make so much money per year. If you make more than this, you don't qualify unless you do the backdoor Roth. You have to jump through all these hoops. Or I don't have to worry about if I put in too little, because they only let you put in $7,000 or $8,000 a year, and you're thinking, well, that's not enough. I need to do more. I can do more with life insurance, and that can be tax-free income to me. So I can actually do a lot of the same things I do with a Roth. Now, I don't invest with it, but it's paying me right now 6% tax-free. I'll take it. That's good money that's coming in, and I can usually live on, give or take, generally at least 7% of whatever the balance is in that account. So if you happen to save up $1 million in there, you could generate right about $70,000 a year tax-free that wouldn't run out for decades. Again, all things vary, depends on how it's set up, but based on the policies we've done, that's what it typically looks like. So although I don't always focus on retirement income using our policies, because I'd rather have people take their money from their policies, use it to invest in other things that generate cash flow, like real estate investing and whatnot, and then that money can actually help them earn money in two places at once. But still, it's a great option, especially when you want tax-free retirement income that does not count against your income and therefore does not push you into higher tax brackets. That's awesome. And then it comes down to this, right? Is can we do something more with our money? Like I keep alluding to, I can do things to create passive income, like in real estate backed assets. I mentioned a lot of those different things. The great thing is, depending on what it is, one, if you can find the right operators, two, if you find the right deals with those operators, what ends up happening is you can easily make a double-digit type of return. And it's not just a rate of return, it's the income that comes from it. So as an example, I had one client that had just $650,000 in her retirement accounts and IRAs and 401ks that then she wanted to use to make more money. Well, what do? Instead of just focusing on living on Social Security, and she knew she could get that eventually too. She was actually not quite 60 years old yet, so she knew Social Security was still a few years down the road. We took that $650,000 now, she went and invested in different types of real estate to then generate, eventually after a couple of years, now over $6,500 a month, which is exactly what she needed to be able to retire, to be financially independent where she can quit working at any time. That money's coming in. Now, some of those things she invested in don't get taxed fully. For example, a rental property actually has some tax benefits because they have depreciation that you can write off. So it writes off against the income that you get where you pay little to no tax on that property. There's other things like oil and gas, which also get a little bit of a tax discount as well. So there's different places you can put your money to keep more of your money because there's some tax advantages that go with them, and it pays you higher income than just hoping and praying that the stock market does something for you. And so that's the big difference, and you can have those kind of benefits there. So if you're looking for ways that not only just be tax-free, but potentially even get your money working harder for you, I'd recommend not just subscribing to the Money Ripples channel here, but go to moneyripples.com, try the passive income calculator, see just what's possible in your situation. You might say, you know what, I don't even care about tax. If I can make triple or quadruple the income I would make in my mutual funds right now, I'll pay the little bit of tax on that. So go to moneyripples.com and check that out today.